Imagine a nation of over 120 million people, Africa's fifth largest economy, unlocking its banking doors after more than half a century of isolation. What happens when 8 of the world's banking powerhouses, with centuries of history and trillions in assets, are now poised to reshape Ethiopia's financial future? Stay tuned as we reveal their stories and the transformative advantages that lie ahead. Welcome to our comprehensive analysis of Ethiopia's banking sector liberalization. In this video, we'll explore the new regulatory framework, provide detailed profiles of the 8 foreign banks that have applied for licenses, and break down the top 10 economic advantages this historic shift promises. We're drawing from official sources and expert insights as of December 1st, 2025, making this essential viewing for investors, economists, and anyone interested in Africa's financial evolution. First, let's set the stage. Ethiopia's banking sector has been exclusively domestic since the 1970s. It's home to 32 local institutions, dominated by the Commercial Bank of Ethiopia, which holds about 60% of all deposits and loans. But everything changed on December 17, 2024, when Parliament passed the Banking Business Proclamation. This new law is a cornerstone of Prime Minister Abiy Ahmed's liberalization reforms. It allows foreign banks to enter the market, a bold move designed to tackle challenges like 30% inflation and foreign exchange shortages, attract foreign direct investment, and integrate Ethiopia into the global economy. Now, let's meet the 8 pioneering banks that have applied for a license. First up is KCB Group from Kenya. Established in 1896 as a branch of the National Bank of India, it's now headquartered in Nairobi with over $12 billion in assets. After rebranding post-independence, KCB expanded across East Africa and now serves 32 million customers, focusing on digital inclusion and small business lending. In Ethiopia, where it already has a representative office, KCB is expected to boost remittances and support the vital agribusiness sector. Next is Standard Bank Group from South Africa, Africa's largest bank by assets. Founded in 1862 to finance colonial trade, it now has assets of $170 billion. A key player since the Witwatersrand Gold Rush, the bank has expanded to over 20 countries and partnered with China's ICBC. With a relicensed representative office as of November 2025, Standard Bank is perfectly positioned to finance major infrastructure and green energy projects in Ethiopia. Our third applicant is Equity Group Holdings, also from Kenya. Starting as a small building society in 1984, it has grown into a financial giant with $12 billion in assets and 15 million customers. Known for its emphasis on financial inclusion and youth programs, an incredible 97% of its transactions are digital. Following recent high-level engagements by its CEO, Equity Group is expected to advance diaspora banking and provide crucial support for small and medium-sized enterprises in Ethiopia. From Asia, we have the Bank of China. Established in 1912, this state-backed institution is a global titan, ranked 4th worldwide, with $4.2 trillion in assets. It has a presence in over 60 countries and is a leader in trade finance and Belt and Road Initiative lending. For Ethiopia, Bank of China is set to provide yuan-based infrastructure loans, which could be a game-changer for addressing the country's foreign exchange shortages. Then there's Qatar National Bank, or QNB. Founded in 1964 as Qatar's first commercial bank, it has grown into a regional powerhouse with $330 billion in assets, serving 30 million customers in over 30 countries. Excelling in Islamic banking and wealth management, QNB is expected to leverage strong Gulf diplomacy to introduce Sharia-compliant remittances and sukuk bonds to the Ethiopian market. From the United Arab Emirates, we have Emirates NBE. Formed in a 2007 merger, this Dubai-based bank boasts $300 billion in assets and serves 20 million customers. With 97% of its transactions being digital, it's a leader in retail and Islamic finance. In Ethiopia, Emirates NBE is well-positioned to drive real estate lending and facilitate the growing trade relationship with the UAE. Our 7th applicant is Absa Group from South Africa. Formed in 1991 through post-apartheid mergers, Absa now operates in 12 African countries with assets of $110 billion. After separating from its former parent company, Barclays, ABSA has sharpened its focus on serving 10 million customers, prioritizing small businesses and sustainability. In Ethiopia, its expertise will be crucial for export finance and supporting renewable energy projects. Finally, we have Deutsche Bank from Germany. Founded in 1870 to promote German trade, this Frankfurt-based giant holds $1.4 trillion in assets. From financing the historic Berlin-Baghdad Railway to issuing over 200 billion euros in green bonds, Deutsche Bank is a leader in corporate finance and ESG investing. Its entry into Ethiopia is expected to facilitate European foreign direct investment and provide sophisticated trade services. So what does all this mean for Ethiopia? The advantages are significant. This liberalization will ignite competition, forcing local banks to innovate and improve their services. It will bring in cutting-edge financial technology, or fintech, revolutionizing how Ethiopians bank. Most importantly, it promises a major influx of foreign direct investment, which is critical for economic stability. We can also expect a wider variety of financial products, greater financial inclusion for underserved communities, and a more resilient economy, all under a new regulatory framework that includes safeguards like a foreign ownership cap to protect the local market. In conclusion, Ethiopia's banking reforms, set to take effect from 2025, are heralding a new era of growth. With initial licenses expected in the fourth quarter of 2025 and operations ramping up in 2026, the opportunities are immense. Stakeholders, including investors who can acquire up to 40% of foreign bank subsidiaries, and the diaspora, who can make birr-based investments, stand to benefit significantly. Now we want to hear from you. Which bank's profile or potential advantage resonates most with you? Share your insights in the comments below. And don't forget to subscribe for more expert analyses on global finance. Our next video will dive into practical investment strategies for Ethiopia's evolving market. Thank you for watching.